Hi there. Did you know leaving 10% to charity can reduce inheritance tax to 36%? In this video, we explain how the UK rule works.
Hello and welcome. Here at ProTax Accountant, we spend our days helping people make sense of the UK's, let's face it, pretty complex tax rules. Today, we're diving into a topic we get asked about all the time. Is there a way to leave a meaningful legacy to a charity you love and reduce your family's inheritance tax bill at the same time? Well, the answer is a big yes, but it all hinges on a powerful 10% rule that honestly, most people miss entirely. Let's break down exactly how you get it right.
So here's our plan for this explainer. First up, we'll quickly look at the standard 40% tax problem that many estates face. Then, the good part. We'll uncover the win-win scenario that can drop that rate to 36%. After that, and this is crucial, we'll walk through exactly how to calculate the baseline amount. Then we'll cover the critical mistakes to avoid. And finally, we'll show you how to put it all together to plan your legacy with total confidence.
All right, let's start with the default setting for many estates here in the UK, the 40% inheritance tax problem. This is the big number that all good planning really aims to reduce.
So, 40%. That's the standard rate of inheritance tax, or IHT, that kicks in on the value of an estate once you go over your available tax-free allowances. And let's be clear, that's a huge slice that can really impact what your family and loved ones are left with.
But here's the big question. What if there was a way to knock that rate down? What if you could lower it to 36% and, in doing so, also give a really meaningful gift to a charity that you're passionate about? Well, that's exactly what this is all about.
And that brings us right to the 36% charity win-win. This is the rule that shows how leaving a legacy can be incredibly tax efficient, but only when it's structured in a very specific way.
Okay, so here's the heart of it, the 10% rule. It's simple in theory. If you leave at least 10% of a very specific figure, what HMRC calls your baseline estate, to a qualifying charity, then the IHT rate on the rest of your taxable estate magically drops from 40% all the way down to 36%. And the cherry on top? The gift to the charity is itself completely tax-free.
Now this is where it gets really powerful. Have a look at this table. We call it the sweet spot analysis. Look at the row for a 4% gift to charity. The family receives £425,800. Now jump down to the 10% gift. The charity gets more than double the donation, which is amazing, but look what the family receives. Exactly the same amount. It perfectly shows the magic of hitting that 10% mark.
So, let that sink in for a moment. If you're already thinking about leaving, say, 7 or 8% to charity, bumping that up to the 10% mark could massively increase the benefit for the charity, often at absolutely zero extra cost to your family's inheritance. It really is one of those rare win-win situations in the tax world.
Okay, but here's the catch. And believe me, this is where most people get tripped up. Calculating that baseline amount. It is absolutely not as simple as just saying 10% of my total estate. Not even close.
You see, most people naturally think, okay, that's 10% of my house, my savings, everything. Or maybe they think it's 10% of whatever's left over at the end. But, and this is a huge but, HMRC has a very specific, legally defined figure called the baseline amount. And if you get that calculation wrong, the whole tax relief can fail.
So what on earth is it? Well, to put it simply, the baseline amount is the value of your estate after you've taken off reliefs and the main tax-free allowance. But then, and this is the key bit, you have to add the value of the charitable gift back in.
Let's just walk through that as a quick 3-step process. Step 1, you figure out the chargeable value of the estate. Step 2, you subtract the standard nil-rate band allowance. And step 3, you add the value of the charitable gift back onto that number. That final figure, that's your baseline amount.
Right, now that we've seen how it should work, let's talk about all the ways it can go wrong. This next section is all about the critical rules and pitfalls, the common mistakes that can end up being incredibly costly for your beneficiaries.
So here are the big ones we see all the time. Vague wording in a will, like 10% of my residue, that's a classic error. Forgetting that your estate is often split into different components is another huge trap. People also make the mistake of gifting assets that already have 100% tax relief, which won't count. And maybe the biggest one of all, wrongly deducting the separate residence nil-rate band from the baseline calculation. Any one of these can completely destroy the tax relief. And just when you thought it was getting straightforward, there's another layer of complexity. You see, the 10% test isn't applied to your whole estate in one go. Nope, it's applied separately to different parts, or components, things like your general assets, any jointly owned property, and some trust assets.
This means it's totally possible for one part of your estate to qualify for the 36% rate, while another part still has to pay the full 40%.
So how on earth do you deal with all this complexity? Well, here is a crucial professional tip. You use what's called a formula clause in your will. Instead of leaving a fixed amount, the will says something like, a sum equal to 10% of my baseline amount. This is a game changer. It basically makes the gift self-adjusting, so you always meet the test, no matter how your estate's value changes over time.
And get this, there's even a way to fix things after someone has passed away. It's called a deed of variation. This allows the beneficiaries to agree to redirect part of their inheritance to a charity to hit that 10% mark. It is an incredibly powerful tool, but, you guessed it, it has very strict rules and has to be done perfectly within 2 years. Okay, let's tie all of this together. Ultimately, planning your legacy correctly is all about one thing: making sure your good intentions are actually carried out, without you or your family accidentally falling into one of these expensive traps. Honestly, the sheer complexity of these rules, from getting that baseline calculation spot on to navigating the different estate components, it really does make professional advice essential. Trying to do this yourself is just incredibly risky and could easily mean all your planning is for nothing. All right, so let's just recap the absolute must-know takeaways. Number 1, the 10% rule can slash your IHT rate from 40% to 36%. 2, it's all based on 10% of that specific baseline amount, not your total estate. 3, a formula-based legacy is, by far, the safest way to draft your will to make this happen because, as we've seen, poorly drafted wills are the #1 reason this brilliant relief fails. And of course, we have to include a quick legal disclaimer. The information we've shared here is for general guidance. It is not professional advice. Tax laws are incredibly complex and they do change.
So, to get this right and to plan your legacy with genuine confidence, professional advice is the way to go. Please don't hesitate to get in touch with us here at ProTax Accountant for a consultation.
And hey, for more clear, practical tax explainers just like this one, make sure you subscribe to the ProTax Accountant YouTube channel. We'll leave you with one final question to think about. Is your own will drafted with enough precision to absolutely guarantee that your family and your chosen charity get the full benefit that the law allows? Thanks for watching.